Welcome to This Week in Personal Finance and Investing on tech-life-insights.com. We've got 6 stories to cover this week. Let's dive right in. First up, story number 1, Emergency Fund versus Budgeting Apps, which is best for U of C students in 2026. Quick verdict. If you're a U of C student looking to establish financial security quickly, setting up an emergency fund is the clear winner. It provides immediate peace of mind by covering unexpected expenses without relying on credit cards or loans. However, if your goal is long-term financial literacy and tracking daily spending, using budgeting apps like Mint or Anab can be incredibly beneficial. Emergency Fund versus Budgeting Apps. Quick comparison table feature/aspect Emergency Fund budgeting apps purpose cover unexpected expenses, track daily spending and budget. Initial setup requires upfront savings, free or low-cost subscription, ongoing management, monthly contributions, daily updates, accessibility, physical cash or FDIC insured accounts, mobile app access, learning curve minimal, steep, requires discipline. Emergency Fund. Next up, story number 2, housing market predictions for Canada in 2026. Investing versus renting. Housing market predictions 2026, investing versus renting. Housing market trends shaping 2026 in Canada. The housing market is expected to face significant changes due to macroeconomic factors like interest rates, inflation, and government policies. According to a report by the Royal Bank of Canada, RBC, home prices are projected to stabilize or even decrease in certain regions starting from 2026. This suggests that now might be an opportune time for lawn. Pros. Potential for high returns. Historically, property investments have yielded significant returns over 10-year periods. Building wealth over time. By purchasing undervalued properties now, investors could see substantial appreciation by 2026 when prices stabilize or recover. Passive income streams. Rental income provides a steady revenue stream that can help cover mortgage payments and contribute to. Next up, story number 3, the ultimate guide to investing in the S&P 500 versus ETFs, which is right for you? Understanding the basics. When it comes to investing in the stock market, one of the most straightforward and popular strategies is to invest in the S&P Wink with tongue sticking out 500 index or its exchange-traded fund, ETF, equivalent. Both options are designed to mimic the performance of the S&P Wink with tongue sticking out 500 index, a collection of 500 large-cap stocks that represent approximately 80% of the total market value of all publicly traded companies in T. How to invest in the S&P Wink with tongue sticking out 500, a step-by-step guide. Opening a brokerage account, choose a reputable broker like Fidelity, Vanguard, or Robinhood. Complete the account setup process by providing necessary personal and financial information. Fund your new brokerage account with an initial investment. Next up, story number 4, the complete guide to investing stocks versus real estate in 2026. Common mistake. Avoid putting all your eggs in one basket. Diversification is key whether you're investing in stocks or real estate. Spread your investments across various sectors and asset classes to mitigate risk. Question: how do I decide between investing in stocks or real estate? A. Consider your risk tolerance, investment horizon, and the level of hands-on involvement you're willing to commit. Stocks are more liquid but volatile. Real estate can offer steady income through rent but requires significant upfront capital. Next up, story number 5. Wealthsimple portfolio line of credit versus traditional bank loans. Which is better for your investment strategy? Quick verdict. For those seeking a flexible and low-interest way to finance their investment portfolio, Wealthsimple's portfolio line of credit is the clear winner. However, if you need more conventional financing with less red tape, traditional bank loans might be the better choice. Comparison table feature Wealthsimple portfolio line of credit, traditional bank loans, interest rate 2.99%, as of April 2023. Provide a specific range or source for this information. Approval speed fast, usually within days. Longer process, often weeks. Purpose: investment funding, general purpose. Repayment flexibility, minimum monthly payments plus interest only. Fixed or variable repayment terms applicati. Introduction. When it comes to financing your investment strategy, having the right tools in place can make a significant impact on your financial goals. Wealthsimple's portfolio line of credit offers a unique way to access funds specifically for investing, while traditional bank loans provide more general-purpose borrowing options. Who should consider Wealthsimple's portfolio line of credit? Investors within. And finally, story number 6, John Hancock Conservative Retirement Fund Review. Is this the right choice for long-term savings? When your mother placed $60,000 into a John Hancock Conservative Retirement Fund in 2014, she likely expected steady growth and minimal risk. Today, that investment is worth just $39,000, a loss of $21,000 over nearly a decade. Is this normal performance for conservative funds? Let's dive deep into the specifics. Verdict: 3 out of 5 stars. The John Hancock Conservative Retirement Fund has its pros and cons, but overall, it doesn't deliver enough value to justify long-term investment unless you have specific reasons tied to your financial goals or risk tolerance. For most people looking for a safe haven in their retirement portfolio, there are better options available. That's a wrap for this week in personal finance and investing. For the full articles with all the details and links, head over to techlifeinsights.com. If you found this helpful, hit that like button and subscribe so you never miss a weekly roundup. See you next week.